Good evening, everyone. Time for another silver update. Now, this is the Dow Jones Industrial Average weekly chart overlaid over the gold chart, and you can see that we're starting to get a downside movement in the Dow. The president came out and implied that the markets are going to begin to suffer, and we know that he met with the heads of the Wall Street banks, Lloyd Blankfein, Jamie Dimon, Deutsche Bank, Bank of America, etc. So there's a lot of stuff happening behind the scenes right now. And the financial situation of the country is dire. There's a lot of stuff that hit on October 1st that wasn't even covered because of the news about Obamacare and the government shutdown. So there's a lot of stuff going on. The outrage at the Capitol with the Obama administration ordering that the World War II memorial be blocked off, even though it was a memorial that is normally open 24/7. It just doesn't have staff there except during the day. They actually went out and blocked it off, and then, even worse than that, apparently hired SEIU union thugs to come and protest the protesters. So a lot of crazy stuff happening. Shots fired at the Capitol. Apparently some woman trying to drive her car into the closed off area of the White House. Just wild stuff going on. But we can see from this chart that back in 2008, when the financial crisis hit, we had a dramatic decline in the stock market. Now, gold had a very minor decline percentage-wise. And of course, then in about October, that's when gold made a bottom. That was really the bottom of the crisis. But you can see that the stocks continued down after that. We're down significantly. So the percentage moves in stocks was enormous, while the percentage move in gold was very small. It appears that we're looking to do the same sort of thing this time. So we may get some downside in the metals as the stocks correct. But if it begins to verge on a financial crisis, then we'll probably see gold and silver stabilize and then start to move up, being that they really are the true safety play, even though the Wall Street shills and the prostitutes in the financial media always want to convince you that the bonds are the flight to safety. The real flight to safety, of course, is a flight to physical gold and silver, because they're not anybody else's debt obligation. They have no counterparty risk. They're the true safety. And so I think as this financial crisis accelerates, and I'm going to show you here from the IMF site how bad the finances really are. But as this financial collapse accelerates, then we will see gold begin to rally in the face of that. Now, one of the stories that wasn't covered due to the Obamacare and debt ceiling debate is this U.S. Postal Service default. The Postal Service defaults on $5.6 billion payment. The U.S. Postal Service has defaulted on a $5.6 billion payment for retiree health benefits that was due on Monday, just as the Postmaster General had warned it would. Quote, "We have not made the required $5.6 billion retiree health benefits pre-funding payment due September 30th, 2013, wrote USPS spokeswoman Patricia Licata in an email to CNN Money. She added that the default has absolutely nothing to do with the federal government shutdown. Quote, "We have been saying for several months that we will be defaulting on this payment. This is the third time we have done so," Licata wrote. Now, if you're not familiar with this issue, basically the Congress has required that the post office, which is a quasi-government agency, supposedly, as they say here at the bottom of the article, unlike other federal agencies, the Postal Service isn't funded by taxpayers and is intended to function like a private business. Well, it's intended to, but it doesn't work. So they've defaulted on this payment. Now, this is payments that the Congress has required that the Postal Service put up to pre-fund their health care for their retirees. So it's something similar to the pension problems that we see in Detroit, except for the fact that in this case, the Postal Service is required to pay that money into the Congress. Now, we all know that any money that goes to the Congress goes into the general fund. It doesn't really matter whether it's Social Security or Medicare or anything that's supposed to have a lockbox. It's supposed to be cordoned off into a special area, but we know it all goes into the general fund because they're broke and they're already printing up about $1 trillion worth of money every year just to pay for the government spending that they can't afford to pay for because tax revenues are about $1 trillion shy. So we know that this pre-funding for the post office is probably all that money is spent. There is no fund for that. The money's gone. And it looks like now the post office is balking on paying that money to the Congress. So this is going to be very interesting as well as we watch this happen. Now, this headline, this is something that you can't make up. You wouldn't believe it even if it were in a movie. You'd say that's too ridiculous. I can't believe that. But supposedly the phone number for inquiries about Obamacare, 1-800-FUCKYO and then U, I suppose. So that's what it spells out, and I've received a lot of criticism for exposing this Obamacare fiasco for what it is, but it really is a fiasco. It's a disaster. It's a complete train wreck. The fact that they've had 3+ years to prepare for this and that it's a complete disaster, it just goes to show you that the government doesn't do anything well, and government-run healthcare is going to be a total disaster. So you want to run the other way as fast as you possibly can to get away from that, because it's really going to be a disaster. Now, if you haven't listened to the X22 report, I highly recommend that. It's a new show that we've started covering, and it's Dave from the X22 report. We listen to it every night, and it's very informative, and especially his updates on the economic collapse, which he does 6 days a week. I don't know how he does it. Maybe he's no longer working, but it's a very good update on what's going on every day with the economic collapse and potential false flags, the war that is going on in the Middle East. So I highly recommend this X22 report. Now, let's get over to this story here about the reserves at the World Bank. This is a link that I was sent, and it is a World Bank listing of all of the reserves of all of the nations. Now, I'm going to read this explanation here. Total reserves comprise holdings of monetary gold, special drawing rights, reserves of IMF members held by the IMF, and holdings of foreign exchange under the control of monetary authorities. Now, this is quoted in US dollars. That may be ending sometime in the future, but currently it's quoted in US dollars. So if you look at this, we have a list of all of the countries and their foreign exchange reserves. I've taken it back to the time frame of 1988 through 1992 to show you the sea change that we have seen in the world economy. So if we look at these are the whole dollar numbers. So you can see here this Argentina number here. That's $11 billion. And so there's no asterisks or anything. These are all the raw numbers. So to just look at these back from the late 80s, early 90s, we can see that I want to go down and look at the United States because, of course, that's recognized as the wealthiest and strongest country in the world. So you can see here that during this period of the late 80s through the early 90s, the United States had about $144 billion to a high of 173. So about an average of $150 billion through this time frame. Keep that number in mind. That's the foreign exchange reserves of the United States. Includes their gold, their special drawing rights, and dollar reserves, or actually reserves of other currencies that are valued in dollars. So let's do a comparison here. You can see the United Kingdom is there at about a third of the United States. You can see that these smaller countries, Thailand, you can see a big increase in Thailand from 7 to all the way to 21. So they were growing in that time period. You got about 60 billion for Switzerland, Spain with as high as 71, 50 billion. And there's Saudi Arabia, a very small number, 22 billion. And Portugal here, 20-something billion. Norway, about 10. The Netherlands, $35 billion in Forex. And we want to look at China. Here's Japan. Japan at the beginning of this period had 106 billion. Now we know they had the market crash during that time frame. They went down to about 80 billion. Italy all the way up to 60 billion in foreign exchange reserves. And there's Germany there hovering around $100 billion. France, $60 billion. And Denmark, a small number. And then we can see China here. $23 billion and went as high as $48 billion in 1991, then back down to about $24 billion for China. We've got Canada at about the same. So let's move forward to the modern day and take a look at these reserves and see the changes, not only the changes in how large these numbers are, and of course that's going to be inflation, that's going to be central bank printing of money, and but not only is there a dramatic rise in the number of how large these reserves are, but there is a dramatic change in the state of the nations relatively. So let's start with looking at the United States here. And what we see here that is so striking is a dramatic drop-off to 139 billion in the latest year, 2012. Now the United States was 300 billion, 400 billion, 500 billion, and then a drop all the way down to 139 billion. Now just to put that in perspective, you can see here that Turkey is at 99 billion, UK 88 billion. Thailand has 173 billion. So based on that, Thailand actually is wealthier than the United States. Switzerland, 475 billion. Sweden at 45. South Africa, a third as wealthy as the United States, according to Forex reserves. Singapore, just Singapore alone, $259 billion. Saudi Arabia, 656 billion. The Russians have nearly $500 billion. Poland has almost as much as the United States at 103 billion. And Mexico actually has more foreign exchange reserves than the United States. Malaysia has the same. And Libya has almost as much. Korea has more than twice the foreign exchange reserves of the United States. Japan has 1.2 trillion. So Japan has almost tenfold the foreign exchange reserves of the United States. Indonesia nearly tied. India twice the reserves we have. Hong Kong twice the reserves we have. Germany, not doing so well there at 67 billion. You can see the dramatic drop off. So the EU also is faltering. France down to 54 billion, and Denmark is fairly strong at 86 billion. The Czech Republic, 44 billion. And here's the big one, China, 3.3 trillion in foreign exchange reserves. So if one were to base the value of a nation or its wealth upon its foreign exchange reserves, China is at least 25 times more wealthy than the United States. Canada comes in with 68 billion. Brazil has almost 3 times the foreign exchange reserves of the United States. And Algeria has more foreign exchange reserves than the United States. So the picture is shocking. Most people believe the United States is the wealthiest country on earth. Actually, that's far from the truth. The United States is rapidly moving towards third world status. The Chinese, according to those numbers, are actually 30 times wealthier than we are. The Japanese are nearly 10 times wealthier than we are. And you can see that this is continuing. My prediction for the stock market is that it will experience a severe decline. It has rallied ever since Obama took office. We're talking about a rally from March of 2009 all the way up to the present. I don't think this is going to continue. I think we're entering a phase here where we're going to transition into reality as the petrodollar begins to be rejected and these countries that are actually much wealthier than we are begin to trade amongst themselves. For the longest time, people have pointed out that, well, if the U.S. consumer, who's the biggest consumer in the world, doesn't buy these things, then the world economy is going to suffer. I think what we're going to find in the future is the U.S. consumer isn't going to be consuming because we simply don't have the money to pay for these things, and then that's going to begin the rapid descent of the United States into third world status. And we'll talk to you next time.